Joining me now in the studio is Bryan Stirewalt, Executive Advisor at Thornton, UAE, and also independent non-executive chairman of Julius Baer Middle East, to discuss more whether stablecoins are simply another payment tool or the future of money itself, especially here in the UAE. Bryan, thank you for joining us today.
My pleasure, Ragda.
Okay, first, let's start in plain terms. What exactly is a stablecoin?
Yeah, it's a very good question. We don't often start there. People just assume things. But stablecoin is a digital asset, but it's a digital asset that is backed by a reserve. Typically, for most stablecoin, that's a US dollar instrument. And as you just mentioned in your opening remarks here this morning, the two largest stablecoin around the world are Circle, USDC, and Tether, USDT. So it's an encouraging sign, I think, for the overall liquidity of the market and the advancement of stablecoin to have Tether signing an MOU here with the DMCC.
Yeah, exactly. I was going to ask you, what does that mean now for the UAE to sign this MOU with Tether? And what does it change also?
Yeah, so one, it brings more investment into the UAE. And typically these markets have been thought of as, a source of capital for innovation elsewhere. But now what you're seeing in the UAE is this is a source of innovation that's bringing capital. So we're reversing this trend. And that's an exciting place to be, looking at all the investments that the country is making and looking at the innovative approach that the country has done with digital assets and making that part of the country's strategy. It's an exciting time.
It's definitely exciting to see that here. And also, another news that the UAE just brought stablecoins and DeFi under federal law with penalties up to 1 billion dirhams, just like we mentioned before. Is that a crackdown, or is it what the industry actually needed?
So I wouldn't put it as either or, I'd put it as both. One, it's a serious statement about the need for regulation here. And there are a multitude of regulators, as you know, in the UAE, with the UAE Central Bank, the Capital Markets Authority, Abu Dhabi Global Market, the DIFC, and VADA. All of them have a stablecoin regime. But what that's saying is that get with one of those regimes, become regulated, because the country will not tolerate an unregulated market to survive here. So part of that is unauthorized activity. Another part of that, we have to consider is the seriousness to which the country is taking anti-money laundering legislation. And that's also applicable to state.
What's up, brother?
Yeah. The UAE now also has its own AED-backed stable coin called AECoin.
AECoin.
Yeah. Can someone living here actually use it day to day yet?
So that's a growing part. And people like Circle and Tether will build the liquidity in that market as well. But for AECoin, and I think there's 3 other stablecoin that are in the process right now. People can use it right now, but it's probably in a limited way. So it doesn't just simply take a source of stablecoin, it takes someone to use the stablecoin. So the more gas stations that take stablecoin, the more shops that take stablecoin, the ability to take a payment in stablecoin requires a bit of market adjustment.
So it's not about the people who's using it, it's about the people who are going to accept it.
Exactly.
Yes, as a payment,
You have
like
to
rent
both.
or anything.
Right. You have to have somebody with the stablecoin, and you have to have somebody that's willing to accept the stablecoin, and that's growing day by day.
Yeah, and okay, in the UAE also, we have a lot of expats, like millions of expats living here and sending money to their homes too. Can stablecoins actually save them as well, them money on transfers, let's say in fees and all?
So this is one of the most exciting parts of stablecoin that I saw from the very beginning, is the ability to make a cross-border payment. Now, the AECoin and the central bank's dirham-denominated stablecoin probably will start more of a domestic route, but the ability to make a cross-border payment or a remittance is really exciting, because anything that we can do as a country to help a laborer move money, to India, to Pakistan, to Bangladesh, to Philippines, the common corridors, because they're supporting families. There may be one worker here, there may be 4 members of a family elsewhere.
Exactly.
And to allow those people to transfer money in a safe way that stablecoin allows, in a faster way that stablecoin allows, in a cheaper way that stablecoin allows, and in a 24/7 environment, that's a tremendous benefit of this particular product.
Yeah, of course, it's very convenient for them to be able to do that. You also sat on both sides of the table, let's say, as a regulator and now as a bank chairman as well. Let's talk about regulation here. Heavy regulations help or hurt innovation?
So heavy regulation never helps anything, right? So the right size of regulation is what helps. And that's where you're seeing a lot of the issues coming, in the UAE right now, is they're really doing the right thing with the regulatory stance that they're taking. And this is one thing we're seeing with the MENA Fintech Association too, that if you look at the website, which I'd encourage everybody to look at the menafintech.org website, because there, what you're going to see is the advancements that have been made through collaboration. So, I mean, the MENA Fintech Association looks at advocating, looks at collaborating, looks at empowering, looks at educating the public. And this, when you bring academics with builders, with investors, with regulators, all in the same room, what you're going to see then, the result of that is not going to be heavy regulation. It's not going to be light regulation. It's going to be the right regulation. And that's where the country succeeds.
Balanced regulation, let's say, for the benefit of the country and the region itself. Now, let's move to Saudi Arabia. It's also moving fast when it comes to digital finance and CBDCs as well. How does the UAE's approach to stablecoins compare to Saudi Arabia?
They're very close to each other, the way I see it. And Saudi Arabia is moving forward, with their Vision 2030. And the MENA Fintech Association works with Saudi Arabia as well, with both the Capital Markets Authority and SAMA, the central bank. But they both regulators, the Central Bank of the UAE and the regulators in Saudi Arabia, have the same thing in mind.
Yeah.
Their regulators, they push for consumer protection, they push for financial stability, they push for market integrity. And so you're seeing that, in their offerings of stablecoin, of very similar approaches to reserve assets, very similar approaches to auditing those reserve assets, very similar approaches, if not identical, to fighting money laundering through digital assets. So there are many more similarities than there are differences between the two.
Yeah, definitely. So 5 years from now, let's say, stablecoins, are they going to be just another tool, or do they actually replace how we move money?
So 5 years from now, I think you're going to see a deeper market in stablecoin. I don't think they'll replace money, not yet. The big battles now are stablecoin versus tokenized deposits. So you see a lot of this discussion around the world. And innovation almost never occurs top down. Innovation occurs from bottom up. And that's what you see from the 25,000 members of the MENA Fintech Association, that this is bottom up advancement. So there would not be a discussion of tokenized deposits right now if stablecoins were not a success. But it's not a binary event going forward that you have either stablecoin or tokenized
or real money. Yeah,
You'll probably have both. It'll be another instrument, which brings another topic from regulators that really, I think, deserves more focus than it's getting right now, is in the area of financial literacy, of how to educate people on what's a safe place to put their money and how to use various financial assets.
I think it's very needed at the moment. So last thing now, 3 stablecoins are currently recognized in the DIFC, USDCoin, EuroCoin as well, and Ripple's RLUSD. What does it take to get on that list?
A serious approach is what it takes to get on that list. But I think in fairness, the DFSA is trying to move away from lists and trying to move toward basic criteria to be recognized. And so that regime has been changing for the past year. But I think we're now to a point where we're going to go past just a list of 3 and we're going to go to criteria. If you want to be a stablecoin, this is what it takes. So you're going to see a deepening of that pool.
Yeah.
That's my personal opinion. That
you said serious approach. Do you think we're there?
Absolutely, we're there. And some of the unserious, I guess if that's a word, players in this market are being pushed out through those regulations that you talked about earlier. That you have to sign up for one of the regulators here to become an official part of this sector. But it's exciting to see.
It is very exciting, and I thank you so much for joining us today, Bryan. Thank you.
It's my pleasure.